What's going on, everybody? It's your boy Slim, aka the Chef, and welcome to Recipe Trading. And today you will be watching the very last video you ever have to watch on key levels. Let's get right into it. So when it comes to trading, I think everyone needs to understand one simple thing: the market moves at levels. A lot of people say, oh, the market moves at waves. The market moves like this. No, the market moves at levels. Remember that. Take note. Write it down. All right, so first thing first, I want you to go to tradingview.com. That is the website that we are going to be using today to go over our key levels. Once you're in TradingView, you're gonna go right here and hit search, and I want you to look up GBP AUD and then click either the FXCM or the Oanda. Doesn't really matter, it's the exact same, and then it's gonna take you to this right here. The next button you're gonna want to press is this over here, launch full chart view. Bop, and that's gonna bring you to this right here. So now what we're gonna go over is what's called a top-down analysis, and this is how you're going to get your key levels. When it comes to key levels, I don't like to go back too far. I believe this range right here is pretty good, and we're gonna start on the weekly time frame. The tool that we are going to be using is the horizontal ray and the horizontal line. Me personally, I like to use the horizontal ray just because to me it looks a little cleaner. As you can see right here, you see price came up to this area right here, correct? And it also came up to this area, and there was a huge rejection. So there's no doubt that this right here in this area, and let's just for the sake of the video, we're gonna make it a little thicker, and we're gonna make the line white. There is no denying the simple fact that this right here is a key area. When price comes here, something happens, all right? And that's all we're looking for. When price gets to somewhere, something happens. And that's on the upside. And then down below, as you can see right here, we can put a horizontal ray. Honestly, it can go all the way back to just about the same area where we started at the top, and we're gonna get the exact same thing. Right, as you can see, price came down here from this level where it rejected, bounced around, broke through, retested, dropped again, and then we can put another weekly level right here as well. Just for the sake of the video, we could put another weekly level right there, and boom, price came down, broke through, gave us a nice double top right here, came down, consolidated for a little bit in this range, and then went back up to this level, and history repeated itself once again. And mind you, this is from 2016 all the way to 2017, and then here we go in 2020 all the way to 2022, and now we're here 2024. So those are huge key levels that we want to take note of. Is no denying the fact. And there's also more levels within, so let's go ahead and mark up a little bit more levels internally, but those are like simply the obvious ones. Of course, we kind of got a little bit going on right here. Just for the sake of the video, we're going to mark this one up. I don't see this as a major weekly level, so let's just change the color just so we know, like, hey, you know, we took note of it. We took note that something happened here, but I wouldn't actually no, I lied. Delete that. We don't need that. So now let's scale into the daily time frame, and we're just gonna break it down even more. But as you can see, it's starting to make a little bit more sense. As you go down in the time frames, you definitely want to stay with what's most recent. I wouldn't go too far back at this point. It was just a key level to be annotated on the weekly time frame. As you go down in time frames, we want to stay as current as possible, and just so it makes sense that we're not having to scroll all the way back to see what's going on. But as you can see here, there's levels within levels. So let's just say, for instance, right here is pretty good level. Let's just do right here, bop. And one thing you can do, one thing that I forgot to mention, is that you can also annotate what these lines are. So you just double click on it, go over the text, and you put weekly. I'm gonna put weekly KL for key level. All right, and you can do that for every single line. Just to show you again, double click on it, weekly key level. Okay, weekly key level, boom. So now we know that those levels are weekly key levels no matter what. So we know that when price comes around this area, something is bound to happen. Now we're looking at the daily key levels. So let's put daily key level. Boom, now we know this is a daily key level. Easy. Boom, we got one right here, but price is all the way up here, so let's focus more, like I said, on what's currently happening. Let's just say right here, definitely a key level. As you can see, price comes up, rejects every single time, so we're bouncing in between that as well. There's more levels, but I mean, we can we can annotate, like we can note these levels, but I just feel like it gets to a point where you got a billion freaking lines on your chart and you really don't need all of it, because you can see it as clear as day. You know what I'm saying? You can see it as clear as day what's going on, and these aren't small moves, might I add. This is still the daily time frame, so catching a move from here to here, that's 730 pips, but that took a whole month. So now what we're gonna do, now that we have our daily time frame key levels, let's note that one because there was a huge rejection there. And let's do one right here because we're only focused on the most recent time frames, right? And let's close this just so we can get a better look at it. The most recent price action. Now let's break it down to the 4-hour time frame, and this is where we're really gonna cook. All right, now we're really freaking cooking. Okay, so within these zones, and don't make this too confusing, right? Let's just say right now, okay, we're bouncing in between. As you can see, we're between this daily level, and this weekly key level. All right, this is all that really matters right now, because what's happening all the way up, if price were to come all the way up here, it's gonna take time. If price were all the way to come all the way down here, it's gonna take time. So realistically, I only noted that for the sake of the video. But realistically, just to make things a lot more simpler, let's go ahead and delete that and keep the charts as clean as possible, and then let's zoom in for the 4-hour time frame. Okay, now as you can see, price comes up, reject, price comes up, reject, price comes up, reject. But where's price going to next? After it rejects, we need to note where's price going. So let's do this one, and we're gonna change this. We're gonna change it back to white. I don't like to use too many colors. Some people like to use a bunch of different colors just so it makes sense to them. I mean, whatever works for you works for you. But I'm gonna note this. I'm gonna note this level right here, 4 hours, because it just makes more sense to me to go over here to put 4-hour key level, right? Boom, 4-hour key level, easy. Same thing here, 4-hour key level. That's level key. Let's put key level. And then let's go ahead and let's just clone this. You can also clone it if you click on the tool and hit this button right here, hit the 3 dots, hit the clone, and then we're gonna bring that down right here. And now we're really in it. As you can see, what's happening on the weekly, what's happening on the daily are, you know, those are really large moves. I want to annotate this as well. Let's just annotate this as well, just because clearly this is a level of supply and demand. But right now we're just going to key levels. I don't want to go too deep into it, but as you can see now, we have these crazy, you know, 4-hour key levels that we're going to be trading in between. Right now things are making sense. We just wanted to note what price has done in the past, so we can prepare for it. But as we zoom in, we're on a 4-hour now. Now we're trading in between these zones here. All right, we're trading in between these zones here. Price came up to here, boom, 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 boom. So now the only time you are going to trade, listen to me, the only time you are going to trade is when price is at these key levels. You are not, listen to me, you are not trading in between. We do not trade the in between, because if we go down to the 1 hour now, there's a lot more price action to look at. Why would you trade? Let's just say you're in this move right here. We can adjust this one just a smidge. Just put it right here, whatever. But let's just say you caught this move right here off of this candlestick. We're not gonna go too much into the different types of candlesticks, but let's just say you caught this this hammer right here, pin bar, whatever you want to look at it, and you go in for a long position, right? And then like this is your optimal entry right here. You know what I'm saying? Put your stop loss below the most recent, or you can put your stop loss right below the freaking key level. All right, put your stop loss right below the key level, and if price were to do a number like this right here, and you can, you know what I'm saying, you can get right back in. But as you can see, boom, we got that candlestick entry, and voila, and voila. Why would you get in? Why would you get in? Let's just delete that. Why would you get in up here in the middle of the zone? You know what I'm saying? Do not enter in the middle of the zone, because now look how big your stop loss has to be. And then you bring it down to the next key level, you have less than a 1-to-1 risk to reward ratio. That's horrible. That's horrible. And if you do something like this, if you were to do something like this, where you just put the stop loss right below your entry candle, yeah, that would have worked. But 9 times out of 10, price will come back down and do you dirty, okay? So just to be safe, bop right there was your optimal entry, because it's right there off of the key level, and you took it up to the next key level. And then what happens next? What happens next? From key level to key level, what's happening? It's so simple. It's so easy when you look at it this way. Price broke up right here. Price broke up right here. Broke through the key level, and then came back down for the retest. Came back down for the retest. Now, me personally, I wouldn't have entered off of this, but let's just say you were really feeling yourself that day. Bop, you got in off of that candle right there. I don't know why you would have got in off of that candle, but just for the sake of the video, you got in off of that candle, and you took this trade all the way up to the next key level. Voila. You had a 3.2 to 1 risk to reward. 3.2 to 1 risk to reward. Simple. Really, really freaking simple. And if we're being more modest, you know, if we're being more modest, bop right there. You know what I'm saying? Now you're getting optimal risk to reward. What happens next? And what's crazy is if you look on my actual chart, this right here, boop, easy trade from one level to the next, easy trade. And I'm gonna tell you exactly how I saw this level, and then we're gonna wrap up the video. I'm gonna tell you exactly how I saw the trade. So I'm looking right, and I see price breaks through with all of this momentum, and it happened at 1 a.m. And I'm like, that had to be news. So now I'm looking for the retracement, and without getting into too much detail, I pulled up my Fibonacci. That's a whole nother video. Don't worry about it. For now, just know I put up my Fibonacci, and these two red lines are what I'm looking for price to reject. And that was my entry. So I'm like, yo, there's no way. There's no freaking way this candle happened at 1 a.m. But it did. I'm like, all right, price is gonna have to reject, and I'm gonna look for entry. So it came back down to the 50% off the fib. I'm like, okay, boom, we got the bullish engulfing. It's like, come on, easy money. Got the bullish engulfing. And if you wanted to wait for more or less riskier trade, you could have waited for this huge bullish engulfing to break. Put your stop loss right underneath the key level, and then took it up for a 1-on-1. But as you can see, you know, not great risk to reward. You know what I'm saying? And then you probably would have did something like tried to hold it for a 2-to-1. And let's just see if you got that 2-to-1. You did get the 2-to-1. You got the 2-to-1 right here. But you know what I'm saying? You know what I'm saying? So that's that. So that is how you mark up your key levels. And if you really want to break it down, don't go marking up. I mean, you can mark up one hour key levels, but it's like the 1 hour key levels don't hold as much weight. So just to recap, you go from the weekly, okay? You go from your weekly, you mark up your weekly key levels. This is my actual chart. You mark up your weekly key levels, your daily key levels, and your 4 hour key levels. And then you want to go down to the 1 hour to see what price action is giving you. And then boom. But when you look, and if you're looking for even more sniper entries, you could do something like go down to the 15-minute time frame and look for these entries. So let's just say this trade right here, let's just say I was on the 15-minute instead. You know what I'm saying? I could have got in right there. I could have got in right off of this break. And got a, you know, even higher risk to reward or a more safer 2-to-1 versus that 1-to-1 that we were gonna get earlier. So that's how you do key levels. All right, don't overcomplicate it. It's so freaking simple. It's so simple. Don't overcomplicate it. Trade when price is on a key level. Remember that the trend is your friend, but if you do find yourself wanting to counter trend trade, I would only do it at the key levels. All right, but as you can see clear as day, we're in the uptrend here. We're in the uptrend, so I'm only looking for buys. All right, like I can tell you right now, for this week, I'm looking for price to do something like come back down here to this area, and then I'm looking for the buys back up, back all the way up. That's what I'm looking for as of right now, as of this week. Today is 5/27/2024, May 27th. That's what I'm looking for. But I also know that price could do something. Price could do something along the lines of just wiggle around in this area, consolidate, break, hopefully give me a retest, and then we enter right here and we also take it up to the next level. Clear as day. That's all I got. It's been your boy Slim, aka the Chef. This is Recipe Trading, and I will catch you all in the next video. Peace.